In terms of Adobe, just want to share a few comments. $220 billion market cap. Adobe, ADBE is the ticker. We've talked about it here a few times, and they report tonight. So I want to refresh my comments again ahead of the quarter tonight. So first of all, Adobe was owned as a monolith. Like, people loved it for very, very, very long time. Strong management team, strong position, dominating a market, greater than 20% revenue growth, even at their scale from 2015 through 2020 continuously. They fell a little bit. Then again in 2021, there were some acquisitions along the way that padded some of that, but still, like, very, very good execution, very good growth, good market growth, dominant player. And then they reported a very difficult comp for when they reported in December 2021, not the November quarter, but the guidance quarter was the problem, big slowdown. Okay. Then in September 2022, September of last year, they tied their shoes together. They went after Figma with this massive acquisition for small amount of revenue, very, very high valuation, et cetera. And people just, they just really pissed the market off. Bad messaging, bad timing, bad idea, all of that. People who had been long-term holders dumped the stock. It went from beloved to hated. Fast forward. We started commenting on Adobe ahead of their quarter, the December 22 quarter. What did we say? Easy comps. Guess what? Easy comps on guidance, of course. People wanted it, but nobody wanted to turn around and own it. They had just sold it. So, market fought it. What happened in March? Another easy comp, and more fighting it from the street, from the side, from everyone. Now they're about to report the May quarter tonight. So you're reporting tonight in June for the end of May quarter, with guidance for the August quarter. And what's going to happen? Easy comps, totally fine. Like, Street will see a continuation of the reacceleration of CRPO growth year over year that continues. And that easy comps approach is going to work all the way until they guide the February quarter. So I wouldn't stick around for the next time they report, for the August quarter when they report that in September, October, and guide for the following quarter. I wouldn't be there. But that continuous reacceleration is just easy comps, and that's all we have here. And the street is still fighting that, and sentiment is still fighting that. If you look at the shares shorter, up 50% from the peak of the stock. The sell side has gone from like loving this as a darling and almost slavishly attentive to Adobe to now almost half the ratings of the street are on hold, which is like sell for the street. So it's like 45% of the street is on a hold rating. So anyway, that's the setup with Adobe. It's just comps. We don't have a view on Adobe beyond that. I can't tell you, oh my God, dominant, going to dominate for 20 more years or whatever, or it's totally impaired. I'm just talking about easy comps. That's why we haven't, put it on the range, put it out there. But like easy comps will continue, should continue. Valuation there's really nothing to say. It's not. It doesn't. There's like nothing strong. It's like you're seeing Microsoft and ServiceNow traded 30 times forward free cash flow. Adobe's like 25, 26, and going to get an upgrade to that number tonight or over the next 90 days. So nothing really strong to comment there.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.